Hello everyone, my name is Ujjwal. I'm a final year student pursuing BBA in Finance from Shahid Sukhdev College of Business Studies. In today's YouTube video, we are going to discuss about various option strategies used by various investors around the world. So I would expect कि आप लोगों को basic understanding होगी options की, although I'll be explaining the basics of the options, various terminologies involved. But if you need a deeper insight into what options are and how they work actually in real life, you might want to go through a deep insight video that can be found on our YouTube channel. I'll put the link on the description. So we can start now.
Alright guys, so let's go through the content that we are going to discuss in this video. Firstly, मैं आपको एक brief introduction दूंगा options का, its types and its examples to understand the basic working of various types of options. उसके बाद we'll be discussing some basic terminologies before delving into the option strategies, जिससे आपकी understanding easy होगी in the future. उसके बाद we'll discuss a brief segment about why do we use option strategies and which kind of investors usually delve into using these option strategies, because of course they reduce the risk but they also cap our profits. So after that we'll also discuss 10 option strategies which are most commonly used. These are pull call spread, pull put spread, bear call spread, bear put spread, box strategy, strangle strategy, straddle strategy, strip strap strategy. So there's a lot of content, so hang on and yeah, we'll start. All right, so what are options? So मैं basic definition देने वाला हूँ, but firstly I'll give you an example by which you can connect and then we'll match it with the definition. So मैं एक example देता हूँ. For example, there's a stock that is rupees 300 and you anticipate that its price can go up, but you're not too sure about it to actually invest in the share of that stock, but you think that the stock is going to go up and you do not know much about the magnitude or whether it would actually go up or not. You want to take a chance. So इस situation में if someone gives you an option कि आप यार ये price set कर लो, that this is the price that I'm willing to buy the share on, and after a specified date अगर ये price इससे ऊपर जाता है तो I'll have the right to buy it, but आप क्योंकि sure नहीं थे और अगर price नीचे जाता है तो you can refuse. You do not have the obligation कि मुझे यार buy करना ही पड़ेगा. So that is what is a basic understanding of option in layman's terms. So yeah, let's go with the definition. So an option is a contract which conveys its owners, the holder, the right but not the obligation to buy or sell an underlying asset or instrument at a specified strike price prior to or on a specified date, depending on the style of the option. So that is, I hope that you'll be able to connect it with my example. I gave you an example in the case of buying it. You can also use it in the case of selling it when you are anticipating a decline in the price of the share. Alright, so yeah, let's move forward. Okay, so we'll be discussing about the two most commonly used options, that is the call option and the put option. Firstly, we'll discuss the call option. So a call option is an option contract which gives the owner the right, but of course not the obligation, to buy a specified amount of any underlying security at a specified price, that is called the strike price, at any specified period of time. So basically, as we discussed in the example before, whenever a person or an investor anticipates an increase in price, they can exercise a call option to take its advantage. Afterwards, we now discuss the put option. So a put option basically gives the owner the right but not the obligation, of course, to sell the underlying stock at a set price, which is also called a strike price, within a specified time. Usually it is exercised when the investor is anticipating a decline in the share price of that stock. So yeah, now I hope that you have understood and you can go through the example that I discussed previously to have a proper understanding of what I meant to say with the definitions right now. So yeah, let's move forward. Okay guys, so now I will discuss the basic terminologies that you should know before we move forward, because these will come in handy जब मैं आपको example दे रहा हूँ various option strategies के. So you should know these terms. So firstly, the spot price. So it is basically the current price at which a given asset can be bought or sold for immediate delivery. No problem if you've not understood, I'll give you an example. So I gave you an example about a stock that you are a bit bullish about, and its stock price is currently rupees 300. All right. So assume करो कि आपने वो एक कॉल ऑप्शन खरीदा at rupees 350 कि अगर इसका प्राइस 350 या उससे above चला गया then I'll exercise the call option and buy the stock. तो फॉर एग्जाम्पल आपने पीरियड रखा 1 month एंड आफ्टर 1 month the current market price of the stock is rupees 400. Of course you will exercise your call option because you have a profit, so that rupees 400 is the spot price. We follow forward. So strike price, so a strike price is the set price at which a derivative contract can be bought or sold when it is exercised. So you can understand from this definition only what I explained in the example as well. The 350 that I explained in the example was the strike price at which you have set a price at which you can exercise the call option. Okay, moving forward, bull. I hope that you know bull. Of course, any person who is interested in the stock market must be aware of it. But still, I'll give you the textbook definition for that, and that is, it is an investor who thinks the market, a specific industry or a security, is poised to rise, whereas bear is someone who thinks opposite and he thinks that a specified security or an industry is poised to fall. So yeah, that is okay. So to answer this question, traders, especially the retail ones, often jump into the trading options with little understanding of the option strategies that are available to them. वो hope करते हैं कि they can maximize their profits as or they can at least limit their losses, but very less know that they can both maximize their profits as well as limit their losses at the same time. So with a little effort, traders can understand these strategies, and we'll be discussing the same in this video only. So I'll be discussing 10 major option strategies that are commonly used. So yeah, let's move forward. Hold tight.
Alright guys, so start करते हैं with the option strategies. Firstly, we'll start with the bull call spread, or we'll start with the spread strategies. So spread strategies such as bull call spread, bull put spread, bear call spread is best implemented when your outlook on the stock or the index is moderate and not really aggressive. For example, the outlook on a particular stock could be moderately bullish or moderately bearish. So yeah, now coming specifically to bull call spread. So in a bull call spread, an investor simultaneously buys call at a specific strike price, which I explained earlier, while also selling the same number of calls at a higher strike price. So both call options will have the same expiration date and the same underlying asset. So this type of vertical spread strategy is often used when an investor is bullish on the underlying asset and expects a moderate rise in the price of the asset per se. So using this strategy, the investor is able to limit their upside on the trade while also reducing the net premium spent. So yeah, I have listed down the pros and cons and have explained it in my explanation about what the bull call spread means and when to exercise them. So of course it uh, does provide us with some kind of security, but it also caps our profits as well. So that's a pro and that's a con as well. It is of course cheaper than buying a normal call, so that's a pro. So yeah, let's move forward. Alright guys, so I hope आपको एक basic understanding हो गई होगी from the previous slide, but still those who haven't understood will understand this with the help of a basic example. ठीक है? So first of all, how to exercise a pull call strategy for a trader. Firstly, as I told before in the definition as well, that आपको एक कॉल ऑप्शन बाय करना है एंड एक कॉल ऑप्शन सेल करना है, और जो कॉल ऑप्शन आप सेल करोगे वो एक हायर प्राइस पे सेल करोगे. So strike price that I have taken is 400 for a specific stock, and for K2 it's 450, that is higher for selling. Option premium is 30 and 10 respectively. Okay, so coming on to the table, आप देख सकते हैं कि मैंने प्राइस जो लिया है, आई होप यू गाइस मस्ट रिमेंबर व्हाट स्पॉट प्राइस इज, बिकॉज हमें अभी पता नहीं कि फ्यूचर में क्या प्राइस होगा. हमने एक रेंज ली है प्राइसेस की. इट कैन लैंड इन द मनी एंड आउट ऑफ द मनी एज वेल. द स्टॉक कैन लैंड इन द मनी एंड आउट ऑफ द मनी एज वेल. सो इसमें क्या होगा कि जैसे हमने लिया है 350 कॉज आपने स्ट्राइक प्राइस जैसे 400 लिया था, इन विच आपने बाई किया था स्टॉक, सो आपका आउट ऑफ द मनी जाएगा एंड यू विल नॉट एक्सरसाइज द स्टॉक, exercise the call option, क्योंकि वो आपका out of the money and you'll suffer losses if you buy it at a higher price. All right. So इसके लिए हमें लॉस हुआ प्रीमियम का, इसलिए -30 लॉस आपका आ रहा है टिल 420, क्योंकि जैसे आपने स्ट्राइक प्राइस आपने अगर मान लीजिए 400 है, अगर आपका स्टॉक प्राइस मतलब आपका स्पॉट प्राइस आ गया 400 आफ्टर 1 मंथ, तो स्टिल आपको मतलब बाय तो आपको उतने में ही करने को मिला, बट आपका लॉस हो गया प्रीमियम का, क्योंकि प्रीमियम तो आपने एक्स्ट्रा दिया था, तो आपको मिनिमम 430 चाहिए ताकि आप इस बाय से प्रॉफिट कर पाए। सो इसको लिमिट करने के लिए वी हैव ऑल्सो सोल्ड अ कॉल ऑप्शन, जिसमें हमने स्ट्राइक प्राइस रखा है 450। ठीक है, तो उसमें जैसे आप 350 तक आपको प्रॉफिट होता रहेगा आपके प्रीमियम का, इरिस्पेक्टिव कि आपका कैसा कैसे भी चल रहा है। उसके नीचे जैसे अगर आपका बिकॉज यू हैव अ बुलिश ओवरव्यू ऑफ द स्टॉक, उसके बाद आपका जो लॉस होगा वो नोशनल होगा, कि आपको 10 -10 -20 -30 जो आपका 470 480 490 है, वो होने के कम चांसेस भी हैं, एंड वो एक नोशनल लॉस होगा जो आपको सफ़र करना पड़ेगा, एंड वो एक टाइप का आपका रिस्क अवर्स करने का, क्योंकि इसमें आप देखेंगे कि आपका जो बुल स्प्रेड बना है अब, वो है -20 -20 -20, इसमें आपका ऑफकोर्स यू नो आपका लॉस रिड्यूस हो गया फ्रॉम 30 to 20 फॉर एनी spot price that comes until 430. ठीक है, so that is the benefit, that is the actual benefit of applying a bull call. Of course it caps your profits, but it makes your risk very limited as well. So yeah, now we can move forward if you have understood. Okay guys, so I hope आपको समझ में आ गया होगा, एक बेसिक अंडरस्टैंडिंग मिल गई होगी. दिस इज द सेम ग्राफ फ्रॉम द सेम टेबल. ठीक है, तो मैं इसको एक बार एक्सप्लेन कर देता हूँ और स्ट्रांग हो जाएगी अंडरस्टैंडिंग. ठीक है, सो आई विल डू इट थ्रू अ कर्सर. ठीक है, फर्स्ट ऑफ ऑल ये आपने जो कॉल ऑप्शन बाय किया था एट लोअर स्ट्राइक प्राइस, ये वो है, दिस लाइन इज फॉर दैट. ये आपने जो कॉल ऑप्शन सेल किया था एट हायर स्ट्राइक प्राइस, ये आपका वो वाला कॉल ऑप्शन है. ठीक है, ये आपका बुल स्प्रेड है जो इन दोनों के सम से क्रिएट हुआ है. तो इसमें आप देख सकते हैं जैसे यहाँ पे आपका जो आपने बाय किया था कॉल ऑप्शन, उसमें आपका लॉस हो रहा था -30 अंटिल एंड अनलेस इट रीचेस 400, उसके बाद भी लॉस हो रहा था, बट दैट इज अंटिल द पॉइंट 430 हम रीच कर जाते हैं. ठीक है, तो अगर आप एक कॉल ऑप्शन सेल करेंगे, सो दैट इज द बेसिक बेनिफिट, कि आपको -10 आपका रिस्क परसेंटेज कम हो जाएगा, और आपका लॉस भी कम हो जाएगा टू 10 रुपीज़. सो ये एक बेनिफिट है फ्रॉम हियर. अब यहाँ पे एक डाउन साइड भी है, क्योंकि आप अगर सिर्फ कॉल ऑप्शन लेते तो आपके पास एक अनलिमिटेड प्रॉफिट का चांस होता, कि आपका अगर स्पॉट प्राइस बढ़ते ही जा रहा है बढ़ते ही जा रहा है, तो आपको प्रॉफिट बहुत ज़्यादा होएगा. बट हियर व्हाट हैपेंस इज कि आपका यहाँ पे प्रॉफिट कैप हो जाएगा. सो दैट इज द बेसिक कॉन ऑफ हैविंग अ बुल कॉल. So yeah, let's move forward. I hope that you have understood this. That is why we took a higher strike price for the selling option, कि वो breach ना होए and cap लगे ना. तो yeah, we'll move forward. Okay, so I hope that आपको एक अंडरस्टैंडिंग बुल कॉल की मिल गई होगी, एंड इफ़ यू हैव अंडरस्टूड दैट, आई थिंक ये पुल पुट समझना would be very easy, and in fact सारे स्प्रेड स्ट्रैटेजी समझना would be very easy if you have understood पुल कॉल. अगर उसमें भी थोड़ा डाउट है तो इसको थोड़ा ध्यान से सुनिएगा. ठीक है, so I'll start with what bull put actually is. So a bull put spread basically consists of two put options. First, an investor buys one put option and pays a premium. At the same time, the investor sells a second put option with a strike price that is higher than the one they purchased. Okay, so receiving a premium for that sale. All right. So note that both the options will have the same expiration date. Okay, since the puts lose value as the underlying value increases, as I explained before while explaining the put option, both options would expire worthless if the underlying price finishes higher. ठीक है, than the higher strike. Therefore, the maximum profit would be the premium received from writing the spread. So those who are basically bullish on an underlying stock could thus use a bull put spread, but they are not very sure, but still they are bullish spread to generate income with limited downside. However, there is a risk of loss with the strategy as well. So अगर हम बोलें इसमें प्रोज एंड कॉन्स भी हम कर लेंगे साथ में डिस्कस. सो द मैक्सिमम प्रॉफिट इन दिस बुल पुट strategy is equal to the the difference between the amount received from the sold put and the amount paid for the purchase put. So in other words, the net credit received initially is the maximum profit, which only happens if the stock's price closes above the highest strike price at expiry. ठीक है. एक ड्रॉबैक है इसमें. it is that it limits the profit earned if the stock rises well above the upper strike price of the sold put option. So आपका notional profit थोड़ा कम होएगा. The investor would pocket the initial credit but miss out on any future gains. ठीक है. As I explained before, the pros and cons are there in both bull call and bull put as well. So yeah, so investors can earn income from net credit paid at the onset of the strategy only, and the maximum loss, as you know, is very much capped and known upfront. So yeah, that is the basic cons. That is the basic pros, and cons I have already listed. So yeah, we can move forward. राइट. सो वी कम बैक टू द एग्जांपल. इससे फिर से थोड़ी ज़्यादा बेटर अंडरस्टैंडिंग हो जाएगी, ऑल्दो थोड़ा टाइम इसमें जा रहा है, बट आई होप आपका बेसिक्स क्लियर हो जाएंगे. फिर आपको फ्यूचर स्ट्रैटेजीज में आपको ज़रूरत नहीं पड़ेगी एग्जांपल्स की. सो दैट इज़ व्हाई आई एम गिविंग यू एग्जांपल्स एज मच एज आई कैन बिफोर एज वेल. ठीक है. तो इसमें एग्जांपल ले लेते हैं. एज आई टोल्ड बिफोर, यू हैव टू बाय अ पुट जिसमें आपका स्ट्राइक प्राइस होगा 55, एंड यू हैव टू सेल अ पुट जिसमें आपका स्ट्राइक प्राइस थोड़ा हायर होगा, दैट इज 60. ऑप्शन प्रीमियम वुड बी 1 and 4 रिस्पेक्टिवली. ठीक है. सो एज आई टोल्ड बिफोर, स्पॉट प्राइस आपका वेरी करता है, हमें पता नहीं फ्यूचर में क्या होगा, सो वी हैव टू टेक रेंज. सो इसमें हमने 50 to 64 रेंज ली है. ठीक है. अगर आप पुट ऑप्शन बाय करते हैं at a strike price of 55 और आपका प्राइस 50 है, सो यू रिमेंबर इन अ पुट ऑप्शन अगर प्राइस नीचे जाता है तो हमें बेनिफिट होता है. तो इसमें आपका बेनिफिट होगा 4 रुपीज़, एंड जैसे जैसे हम बढ़ाते जाएंगे आपका बेनिफिट कम होता जाएगा. ठीक है. आपको इसमें माइंड यू प्रीमियम का ₹1 माइनस करना होगा अपने प्रॉफिट में से. 55 माइनस 50 -1 होगा इसमें. ठीक है. जब हम सेल करेंगे ऑल तो इसमें आपका एक नोशनल लॉस होता रहेगा. सो जैसे जैसे आपका प्राइस बढ़ता रहेगा वो आपका मतलब सेल में आपका प्रॉफिट होएगा बल्कि. एंड अभी जैसे 50 पे आपका लॉस ही हो रहा है -6 का, वो लॉस थोड़ा कम होता रहेगा जैसे जैसे आपके स्पॉट प्राइस बढ़ेगा. सो वी हैव क्रिएटेड द बुल स्प्रेड जिसमें आपका लॉस इससे ऑफसेट हो रहा है, आपके आपने जो बाई किया था उससे आपका लॉस ऑफसेट हो रहा है. और फ्यूचर में जैसे आपने मतलब आपको लग रहा है कि बुलिश होगा, क्योंकि हमारी बेसिक जो बुल पुट की वो थी कि स्टॉक स्टॉक ऊपर जाएगा. सो दैट इज ऑल्सो फुलफिलिंग कि आपका ऑफ कोर्स एक कैप लग गया आपके प्रॉफिट पे, but still you are earning a very handsome amount of rupees 3, and instead of having a loss of having rupees 4, you have limited your loss at -2 only. and even further आपका अगर प्राइस सच में नीचे ज़्यादा जाता है तो आपका -2 से ज़्यादा लॉस नहीं होगा, बट of course there's a con as well कि आपका प्रॉफिट 3 से ज़्यादा नहीं होगा. Okay, so we can move forward. Okay, so we are done with the bull. Now we'll start with the bear call spread. So if you have not understood what a bull call or a bull put was, now is a good time to pay attention. So a bear call spread, I'm sorry, is a two parts option strategy that involves selling a call option and collecting an upfront option premium, and then simultaneously purchasing a second call option with the same expiration date but a higher strike price. All right. So a bear call spread is somewhat similar to the risk mitigation strategy of buying call options to protect a short position in a stock or index. So this can be used in various situations. When in a stock, modest downside is expected by the investor, when in a stock volatility is a bit high, and if the investor is a bit risk averse and risk mitigation is required in this condition. So yeah, we can move forward with the example. So you can see the example in front of you, and we'll solve it in the next slide. Okay, so as you must be aware, a pair call is used when the investor thinks that the stock price of a stock will decrease. Okay, so in this case also you can see that again we have taken a range for the spot price as we don't know कि कितना रहेगा in the future. And for the first call option, we have sold it and we have bought another call option at a higher price, as I told before in while telling you कि क्या है पेयर कॉल. सो इसमें आप देख सकते हैं कि शुरू में क्योंकि हमारा प्राइस कम है, स्पॉट प्राइस कम है, इसलिए हमें ऑप्शन सेल करने से हमें नोशनल प्रॉफिट ज़्यादा हो रहा है। एंड ऑफ कोर्स जब हमने बाय किया है एंड प्राइस स्पॉट प्राइस कम होगा हमारे स्ट्राइक प्राइस से, तो हम उसे एक्सरसाइज नहीं करेंगे, तो हमारा प्रीमियम का लॉस होएगा सिर्फ। सो लॉस -2 एक कांस्टेंट रहा है जब तक हमारा स्ट्राइक प्राइस तक मैच नहीं होता। सो आफ्टर 48 हमें अपने बाय से प्रॉफिट मिल रहा है, बट हमें अपने सेल से नेगेटिव रिटर्न्स मिल रहे हैं। ठीक है, तो इस पूरे टेबल को देख के आपको पता चल जाता है कि दिस इज़ नॉट अ वेरी अ वेरी प्रॉफिटेबल स्ट्रैटेजी। ये तब स्ट्रैटेजी यूज़ की जाती है जब ही नोज कि डाउनसाइड हो सकता है, बट ही इज़ नॉट वेरी श्योर अबाउट इट एंड ही वांट्स टू प्ले अ बिट न्यूट्रल एंड अ बिट सेफ। सो इस केस में of course he wants the price to stay from 35 to 40 range, and yeah, so you can see that with the help of the graph as well कि mostly वो एक्सपेक्ट कर रहा है कि यहाँ से 35 से 40 तक ही रहे, उसके आगे जब जाता है ऑफ कोर्स कैप लग जाता है वहाँ पे लॉसेस का, बट स्टिल इट इज़ नॉट अ वेरी रनअवे स्ट्रैटेजी जिसमें आपको प्रॉफिट ज़्यादा हो रहे हैं एंड आपका रिस्क कम है, क्योंकि यहाँ पे आप देख सकते हैं लॉसेस भी काफ़ी ज़्यादा हो रहे हैं। Yeah, we can move forward now. Okay, so this will be the last one of the spread strategies that we have been discussing for a while now. So you might want to hear this out because this is quite important and a bit more important than bear call itself. So yeah, I'll be starting with it. So bear put is a type of option strategy basically where an investor or a trader expects a moderate to a large decline in the price of a security. Okay, so it is achieved by purchasing put options while also selling the same number of puts on the same asset with the same expiration date as well at a lower strike price. Okay, so the maximum profit that you can gain using this strategy is equal to the difference between the two strike prices minus the net cost of the options. Okay, so when we come to the advantages, I think the main advantage of the bear put spread is that the net risk of the trade is reduced. Selling the put option with the lower strike price helps offset the cost of purchasing the put option with higher strike price. So therefore the net outlay of the capital is lower than buying a single put outright. Okay, so it carries far less risk than shorting the stock or a security, since the risk is limited to the net cost of the bear put spread. Okay, so among the pros you can have limiting losses, working well modestly with the declining markets as well. In terms of cons, it is risky if asset climbs up dramatically. It also limits the profits to difference in strike prices, as is common with various spread option strategies. So yeah, it can have risk of an early assignment as well. So we can move forward now. All right, so now we move on to the example again for simplification purposes. So as you might have noted down in the previous slide, I said that we have to buy a put option at a specific strike price, and we have to buy, or I'm sorry, we have to sell a put option at a lower strike price. So that is what we have done in the example as well. You can see the strike price of the selling is 30 and the buying, that is K2, is 35. Option premium is 2 and 4 respectively. So you can see the range that we have here, 25 to 39. Of course, selling the put option would at a low price would make us suffer losses, because of which of course our profit would be capped to 3. But it also benefits us in case the spot price of the stock increases and we suffer losses in terms of buying the put option. So because the loss there is unlimited, we will be able to cap it with the help of the sell put option that we have exercised. So you can see that we can cap our losses to -2 and we can cap our profits to 3. So this is a decent strategy in terms of the investor not being sure about the prices. He expects it to go downwards, but still he's unsure. So this is a better strategy as compared to bear call in my opinion. Also you can see, आप देख सकते हैं the graph as well कि आपका जो पुट कॉल है, जब आप सीधा अगर बाय करते हैं तो आपके लॉसेस होने के चांसेस हैं, एंड यू आर एबल टू कैप इट विद द हेल्प ऑफ द पेयर स्प्रेड, बट ऑफ कोर्स आप ऑन द हाइंड साइड आपके प्रॉफिट्स भी कैप उससे हो जाते हैं, बट स्टिल आई थिंक इट्स नो it's a strategy worth applying in terms of you not being sure about the stock going down. So whenever, in my opinion, whenever uh, an investor is thinking that the price of the stock is a bit uncertain and it's expected to decline, then they can exercise bear with put. That is my recommendation. Yeah, we can move forward now. Okay, so finally we move forward from bear and bull. So let's start discussion about a bit more complex strategies in which you'll find combination of a lot of things you have learned before. So yeah, so we'll start with the box strategy. It is basically an arbitrage strategy which involves buying a bull call spread, one ITM and one OTM call together with corresponding bear put spread, which also has one ITM and one OTM put, with both spreads having the same strike prices and expiration dates also the same. So the strategy is basically called the box spread, as it is a combination of two spreads, which means four trades, and the profit and loss calculated together as one trade. So the total cost of the box remains same irrespective of the price movement of the underlying security in any direction. The expiration value of the box spread is actually the difference between the strike prices of the options involved. Okay. Basically, this strategy should be used when the component spreads are underpriced in relation to their expiration values. So in most of the cases, the trader has to hold the position till expiry to gain the benefits in terms of the price difference, which are in the terms of the price difference. So this strategy majorly should and is used by the advanced traders, as the gains are pretty minimal and the brokerage payable is also a considerable amount of the profit that you already gain. So yeah, this is a strategy for advanced traders. Okay, so now taking a bit different kind of example. Of course, we could do the same that we did in the previous spreads as well, but we are going to take a different kind of example here. So for example, stock trading at rupees 45, for example, the spot price is 45. The option contracts for the stock is available at the following premium. That is July 40 call at rupees 6, July 50 call at rupees 1, July 40 put at rupees 1.5, July 50 put at rupees 6, and the lot size is 100 shares in one lot. So how will we create a box strategy or a box spread? So the steps involved would be to buy a bull call spread, buy a July 40 call plus sell July 50 call. Secondly, will bull call spread cost will be equal to the 6 into 100 minus 1 into 100, that is rupees 500. Then we buy a pair put spread, in which we buy July 50 put and sell July 40 put. So the pair put spread cost will be 6 into 100 minus 1.5 into 100 equals to, that is equal to rupees 450. So the total cost of the box spread will come out to be 500 plus 450, that is 950. We must also note that the expiration value of the box will be computed to be 50 minus 40 into 100, that is rupees 1000. So we have gained a profit of rupees 1000 minus 950, that was the cost. That comes out to be rupees 50. Now, as I told before, the net profit will be calculated with reducing after reducing brokerage and the taxes. So since the total cost of the box spread is less than the expiration value, a risk-free arbitrage is possible with the long box strategy. So we can mitigate fully the risk and still can gain the profits, but still the profit would be very minimal since the brokerage and taxes will also be applicable on them. So yeah, now moving forward. So taking three scenarios, the first scenario being the stock price remains unchanged at rupees 45. So the July 40 put and the July 50 call expire worthless, while both the July 40 call and the July 50 put expires in the money with rupees 500 intrinsic value each. So the total value of the box at expiration is rupees 500 plus 500, which comes out to be 1000. All right. Second scenario would be when the stock price reaches to rupees 50. So only the July 40 call expires in the money with rupees 1000 in intrinsic value. So the box is still worth rupees 1000 at expiration. Okay. After that, in scenario 3, the stock price will fall to rupees 40. A similar situation as scenario 2 happens, but this time It is the July 50 put that expires in the money with rupees 1000 in intrinsic value, while all the other options expire worthless. So still the box will be worth rupees 1000. So yeah, that is all the scenarios that we want to discuss. Hope you understand the box strategy now. All right, so now we come to straddle strategy. This is a strategy that I think you will find a bit easier than the ones previously discussed. So I hope you will be able to understand this properly, and this might excite you as well. So straddle basically is a neutral option strategy that involves simultaneously buying both a put option and a call option for the underlying security with same strike price and the same expiration date. All right, so in this, a trader will profit from a long straddle when the price of the security rises or falls from the strike price by an amount more than the total cost of the premium paid. You know, you'll pay the premium for call and put as well. So the profit potential is virtually unlimited here, so long as the price of the underlying security moves sharply. So here volatility plays a very major role. If any stock is volatile, then a trader will surely go for a straddle strategy. Okay, so now we'll move with the example and discuss that in the next slide. Alright, so we'll start with the example. Although I hope कि आप लोगों को ये वाली strategy better understand होगी as compared to the previous strategies. So firstly, we'll understand with the help of the table. So as I told before, we have to buy a call, we have to buy a put, and both at the same strike price. The premium would be 3 and 2 respectively for call and put. ठीक है? So अब आप देखोगे at price 40. We have taken the range again for the spot prices at price 40. Of course call में हमें नुकसान होएगा, will not exercise it, so हमें premium का नुकसान होगा, that is -3, that will be fixed until our our spot price reaches around 50 and above that. So तब तक हमें -3 का लॉस होएगा, but you can see that at 40, because अभी भी काफ़ी gap है between 50 and 40, we'll still be able to make a handsome profit with the help of the put that we are going to exercise if the spot price is 40, and still we'll have a profit of rupees 5. So that is quite handsome. Of course it has been dented a bit by the premium that we have to pay for call, but still the profit is quite handy. Of course जब आप आगे जाएंगे and when for example you look at a spot price of 58, देन आपको आपका कॉल आपको प्रॉफिट देगा एंड पुट आपको लॉस देगा प्रीमियम का, दैट इज -2. सो आपका अगेन प्रॉफिट हो जाएगा अराउंड रुपीज 3 का. सो दिस वर्क्स बोथ वेज. एज आई टोल्ड, दिस इज अ न्यूट्रल स्ट्रैटेजी. आपको पता नहीं कि ऊपर जाएगा या नीचे जाएगा, यू डोंट हैव एनी बायस कि आप ऊपर जाए या नीचे जाए. ऑफकोर्स नीचे जाएगा तो थोड़ा ज़्यादा बेनिफिट होएगा, बट स्टिल आपका कोई बायस नहीं रहेगा. सो इसमें ये बेनिफिट हो जाएगा आपको कि आपका अगर प्राइस ऊपर भी जाए या नीचे भी जाए तो आपको दोनों जगह से प्रॉफिट होएगा. ऑफ कोर्स थोड़ा कैप हो जाएगा प्रॉफिट पे, बट स्टिल आपको दोनों तरफ से प्रॉफिट रहेगा. बस द ओनली ड्रॉबैक इन दिस स्ट्रैटेजी इज इफ द स्टॉक प्राइस इज नॉट volatile to much extent. For example, you can see between 46 and 49 or 50 per se, you can see that we are suffering losses because वो ऐसा एरिया है जहाँ पे ज़्यादा चेंजेस नहीं हुए, क्योंकि हमने स्ट्राइक प्राइस भी 50 लिया था और उसके अराउंड ही अगर हमारा स्पॉट प्राइस हुए तो हमें लॉसेस हो जाएंगे. यू कैन ऑल्सो सी दिस विद द हेल्प ऑफ द ग्राफ. पर्पल लाइन आप देखोगे, ये है स्ट्रैडल जो हमारा आया है स्ट्रैडल स्प्रेड जो है. सो इसमें आप देखोगे वी शेप्ड बन रहा है, बट इसमें हमें लॉसेस हो रहे हैं बिटवीन 46 टू 54, क्योंकि यहाँ पे ज़्यादा वॉलेटाइल नहीं रहेगा स्टॉक प्राइस इसी के अंदर हॉवर करता है. तो ठीक है, इसके बाहर करता है देन वी कैन हैव अनलिमिटेड प्रॉफिट्स. सो दैट इज बेनिफिट फुली. बट इसके बीच में अगर वॉलेटाइल कम रहेगा देन विल डेफिनेटली सफर लॉसेस, क्योंकि प्रीमियम्स दोनों के एडअप हो जाएंगे उस केस में, एंड इंडिविजुअली से ज़्यादा भी वो लॉसेस दे सकता है. It is a bit risky, but if you know that a stock has been in the news and has been performing very volatile in the market, has been going up or down very recently and is going to get a bigger news that you might not know कि उसका रिएक्शन क्या होगा स्टॉक प्राइस पे, तो आप स्ट्रैडल ऑप्शन स्ट्रैटेजी ज़रूर अप्लाई कर सकते हैं. इफ़ नॉट, इफ़ आपको लगता है कि इतना वॉलेटाइल नहीं रहता, वॉल्यूम कम रहता है, देन you can ignore the strategy as well. So now we can move forward. Okay, so now we'll discuss the strangle strategy. It is also very easy and very similar to the straddle strategy with a minor difference. So starting with its explanation, it is an option strategy in which the investor holds position, of course, both in call and put, just like in the straddle. But the main difference is there's different strike prices for both call and put. So they do have same expiration date and underlying asset. So a strangle basically is a good strategy if you think the underlying security will experience a large price movement in the near future, but are unsure of where it's going to swing. However, it is profitable mainly if the asset does swing sharply in the price. So as I told before, it's very similar to straddle but uses options at different strike prices, while a straddle uses a call and put at the same price. All right. So there are various pros and cons. Of course, pros and cons are pretty similar to what they were in the straddle as well. The price can move in either direction, so you have a chance for getting unlimited profit. It is a bit cheaper than other option strategies as well. In terms of cons, it can carry more risk than other strategies as well. So there are various kinds of strangle. You can have a long strangle, you can have a short strangle. The more uh, common strategy, although, is the long strangle. The investor simultaneously buy an out of the money call and an out of the money put option. The call option strike price is higher than the underlying asset's current price, while the put has a strike price that is lower than the asset's market price. So this strategy has large profit potential since the call option has theoretically unlimited upside if the underlying asset rises in price, while the put option can profit if the underlying asset falls. So the risk on the trade is limited to premium paid for the two options. Okay, so I hope that you would have got a fair amount of idea about Strangle with the help of this explanation. Also, you might be able to connect it with the straddle strategy discussed in the previous slide as well. So we move forward. So almost straddle and strangle are equal apart from the difference that I told in the previous slide. With the straddle, the investor profits when the price of the security rises or falls from the strike price just by an amount more than the total cost of the premium. So it doesn't require as large as a price jump. So buying a strangle is generally less expensive than a straddle, but it carries greater risk because the underlying asset needs to make a bigger move to generate a profit, right? So that is the basic difference between the two. Now we can move forward with the other strategy. Now starting with another popular option strategy, that is the butterfly spread. So the butterfly spread refers to an option strategy that combines bull and bear spreads with a fixed risk and capped profits. So these spreads are intended as a market neutral strategy and pay off the most of the underlying asset does not move prior to the option expiration. They basically involve either four calls or four puts, or a combination of puts and calls with three strike prices. So a butterfly spread basically combines both a bull and a bear spread. This is a neutral strategy that uses basically four option contracts with the same expiration but different strike prices, a higher strike price, and at the money strike price, and a lower strike price. So another question is how a long call butterfly spread is constructed. So I'll explain it briefly. So the long call butterfly spread is basically created by buying a one in the money call option with a low strike price. All right, writing two at the money call options and buying one out of the money call option with higher strike price. So net debt is created when you enter the trade. All right. So in this case, the maximum profit that is achieved if the price of the underlying asset at expiration is the same as the written calls, the max profit is equal to the strike of the written option less the strike of the lower call, premiums and commissions paid. All right, so I hope you would have understood this. Now we can move to the next strategy. All right, so the last two strategies are left, that are strip and strap. So these two strategies basically are quite similar when we talk about the approach. All right, so starting with the strip strategy. So basically it's a bit of a modified version of the long straddle strategy only, in which we buy one call and we double the puts, and strip is it's basically a bearish market neutral strategy in which the investor is hoping for the market to go down but is still unsure whether it will go down or not. So it will provide a double profit potential as compared to what straddle will provide, because there there was only one call option and there was only one put option. Here we are having two put options because we have a hope that the market would go down. All right, so now moving forward, the trade-off is of course the neutral. It is a neutral strategy, so it is hoped that it would go downside and the profit would be unlimited and double than what would have been possible when you use the straddle strategy. So when to exercise, so when of course as I said before, when you are a bit bearish on the stock, जब आपको लगे कि stock का price नीचे जा सकता है and you have to earn more profits, and आपको थोड़ा, क्योंकि इसमें रिस्क ज़्यादा होगा ऑफ कोर्स बिकॉज यू आर यूजिंग टू पुट ऑप्शंस, आपका प्रीमियम ज़्यादा जाएगा, तो आपको थोड़ा ज़्यादा भरोसा है कि स्टॉक नीचे जाएगा एंड आपको इसको कैश इन करना है, आपको ज़्यादा प्रॉफिट्स कमाने हैं, देन यू विल गो फॉर द स्ट्रिप स्ट्रैटेजी। बिकॉज कभी कभी ऐसा भी होता है, कुछ इन्वेस्टर्स ऐसे भी होते हैं जो सीधा स्टॉक नहीं खरीदते, ऑल्दो दे थिंक दैट द प्राइस वुड गो डाउन, बट स्टिल दे वांट टू negate the risk. So इसमें risk एकदम negate नहीं होगा, there would still be loss, but in case the price moves in the opposite direction than what was expected by the investor, तो ये संभल जाएगा, ठीक है। So we can move forward now. राइट, सो ये कोई रॉकेट साइंस नहीं है, दिस इज़ क्वाइट ईजी, आप लोग ग्राफ से भी इंटरप्रेट कर सकते हैं। आपने जो वी शेप्ड ग्राफ देखा था इन द स्ट्रैडल स्ट्रैटेजी, वो बीच में था, बट दिस इज मोर टिल्टेड टुवर्ड्स राइट, एंड देयर इज मोर ऑन द लेफ्ट साइड। सो you can see that the bearish approach of the investor is quite visible through the graph only, कि ज़्यादा जितना ज़्यादा प्राइस नीचे जाएगा उतना ज़्यादा प्रॉफिट्स होंगे, ऑफ कोर्स प्राइस आगे जाएगा तो थोड़े लॉसेस होने के चांसेस हैं, एंड आफ्टर दैट प्रॉफिट्स इतने ज़्यादा नहीं होंगे अगर प्राइस बढ़ गया उस स्टॉक का, ठीक है। नाउ वी कैन मूव फॉरवर्ड। Okay, now think of the stark opposite of what we listened in the strip strategy. Here we buy two calls and one put. Here the approach of the investor is bullish. He is thinking that the market would go up. ठीक है, तो वो थोड़ा ज़्यादा एक्सपेक्ट करेगा कि मार्केट ऊपर जाएगा, बट स्टिल डज नॉट वांट टू टेक द रिस्क ऑफ डायरेक्टली बाइंग द स्टॉक्स एंड लिमिटिंग द रिस्क ऑफ लॉसेस, बट उसे डबल प्रॉफिट की कमाई होगी एज कम्पेयर टू व्हाट ही वुड हैव गेन्ड इफ he had used the straddle strategy, ठीक है। So I have already explained the strip strategy. I think you would have understood what the strap strategy. It is basically for the investors who have a bullish approach. वो दो calls और एक put लगाएंगे, ठीक है। Now we move to the next slide. Alright, so this is very basic as well. आपने जैसे स्ट्रिप में देखा था कि वहाँ पे थोड़ा ज़्यादा झुकाव था लेफ्ट की तरफ एंड राइट की तरफ थोड़ा कम था। हियर यू कैन सी कि राइट की तरफ ज़्यादा है एंड लेफ्ट की तरफ कम है। ऑफ कोर्स अगर आप एक ही पुट ऑप्शन लगाएंगे तो अगर प्राइस ऑफ द स्टॉक गोज डाउन, स्पॉट प्राइस इज लेस, तो आपके प्रॉफिट होने के चांसेस कम ही रहेंगे एज कम्पेयर टू जो आपका राइट में होगा, जो आपके दो कॉल ऑप्शन होंगे। अगर आपका स्पॉट प्राइस बढ़ेगा तो आपके प्रॉफिट होने के चांसेस ज़्यादा होंगे एज कम्पेयर टू व्हाट इट वुड हैव बीन इफ यू हैड यूज्ड अ स्ट्रैडल स्ट्रैटेजी, ठीक है। सो नाउ वी कैन मूव फॉरवर्ड। Okay guys, so thank you so much. I had the most fun while making this video. I hope you had learned from this. I am open to any doubts that you might have for me, और I hope आप लोगों को मेरी way of explanation पसंद आई होगी. I have tried to keep the things simple with the help of examples, and I'd also like to thank NK and Sir for giving me this opportunity to present this video. And yeah, thank you so much and hope you understand it, and if you have any doubts feel free to contact. Thank you.